Good morning. My name's Ryan Littlestone from forexflow.live. Explosive start to the week we see as we see that China is ramping up their side of the trade war. What's happened is they've let their currency blast through the 7 level in CNY and CNH. This was a big ace they had up their sleeve for a long while now, and they've kept their currency in control while they've been negotiating with the US. But following Trump's tweets and comments last week and over the weekend, China might have decided to give the US a little bit of a taster that they're not as powerless as Trump might think. Instead of keeping their currency well within limits, they've let this level go up through the 7 level just to counteract these tariffs that are coming in. It's potentially a very big play from China because it does shift the landscape a bit, and it's more of a defensive combat stance against Trump and what he's been saying. So the question right now is how that's going to affect Trump. Is he going to come out and start declaring that, we're going to be in a full-on currency war? Is this going to kick these trade battles up to another level that could be quite dangerous for markets? We've seen a reaction in dollar versus the yuan currencies. But also what we're seeing is the big increase in volatility coming into the market elsewhere. Now, one chart we look at here at Forex Flow is the dollar yen option volatilities. And the chart we've got here is the 1 month at the money option vols. Now, as you can see from the chart, it was trading sub 5% at the beginning of this month. Vols were very low. We saw that in the currency itself in stages. We're seeing low volatility there. It's nearly doubled. We're up to 8.28% this morning, and that just shows that it's kicked in. And dollar yen last week was up at the 109s, and as we see from the chart, it's all the way down now into the 105s, 105.75. So this increased volatility is going to be a factor over the next few sessions, depending on the reaction from the US and then counter reaction from China. We could be building up into, as I say, another big round of risk aversion. And what that's going to do, that's going to put the central banks and particularly the Japanese finance ministry on high alert for any big volatile moves in the yen. Obviously, that could mean intervention if it does get too heavy. Now, we've already had one currency diplomat from from Japan out this morning saying that they're going to be watching for volatile moves. So we're pretty much at stage 1 already, which is the talk the game. So we're probably going to get some more officials coming out and just saying they're monitoring the volatility that's going on. If we do step up, then they're going to start potentially, taking a harder line on their intervention talk. But we're really going to need to see big volatile moves. A couple hundred pips now and again is not really intervention territory. If we see a constant fall of 100 pip drop here, then a 200 pip drop here, that's when we're going to start getting into potential intervention territory, which again, that might kick Trump off if Japan intervenes. So by looking at the dollar yen charts and the type of levels we're looking at, we really are down heading for these lows, the flash crash lows and also the lows in 2017. And that's one area to watch. If we break below those, this 104.50, 60 area, then potentially we're going to head to the big psychological 100 level. And that is going to be a big deal because that's going to hurt Japan and what they're doing. And again, it's going to bring up those intervention talks. So the long and short for the next few sessions ahead is bear in mind that we've got this increased volatility. It is going to make things choppier. Remember to use your stops. We'll wait to hear what Trump says and just see how this battle develops. And, stay safe while trading and, good luck. So that's it from there.